This is the briefing for Thursday, April 2nd. Really kind of an interesting day in today's trading. This is a day before a long weekend. Markets are closed tomorrow, Friday, April 3rd, representing their celebration of the Easter holidays. So basically, we had an opening that was lower, and it looked like, in fact, breadth was fairly weak at the open. In fact, I thought that certainly we were going to see a continuation of the move lower, but as is typical in this market, we typically gap down and then trade higher. We gap up and trade lower going into the closes. So it really wasn't out of the unusual for the environment of the market that we're in right now. Now, this is S&P breadth for the S&P 500. So you can see there was only 99 shares positive in the at the open in the S&P 500. If we look at the Nasdaq, you can see we were negative 2,039 shares negative, and the Russell was negative about 918 shares negative. So basically, it was a weak open, but as I was watching this develop, as we were moving higher, I really thought that we were going to see some type of a turn back down again because of how weak breadth was. But what happened was breadth increased and came higher to support what would happen with price. So as price began to move higher, even though breadth was weak at the open, breadth continued higher as well. Volume was extremely low today, which is not unusual for a holiday weekend or a Friday before, a Thursday before a holiday weekend like this, Friday being closed. So that's to be expected. And typically, Easter Monday would probably have light trading in that day also, as some markets are open on Monday, but we may have a bunch of traders that are taking that day off as well. So you can see here we are on a daily basis. This is the spiders. So you can see that we're really trading between this area right through here. With a high at 660 and then a low of 645. That's going to be an important area. The key reference area is there. Breaking that is going to open up a test of 670, and then breaking 643, 645 is going to open up a test of 630, and that is really a critical area because that's going to put us in a greater degree time and price rotation to the downside. And I would expect if that happens, we're probably going to see some accelerated selling occur. On the other hand, you can see we bounced right off of 630. It goes all the way back to this previous low here. And then, of course, we are rotating back to the upside. We're unable to take out yesterday's high. And you can see what happened with volume here. At 52-week highs minus 52-week lows, still negative 145 shares. But it ticked down slightly, a little bit weaker. You can see breadth was weaker in today's trading, as was net volume as well in the NYSE. Looking at the Qs, we are basically in the same situation. Really rotating between this 560 area, and it looks like about the 590 area as well. Trading just above this 580 area, which we were above yesterday in yesterday's trading and in today's trading. Once again, volume pretty low, breadth lower as well. Not a divergence because we didn't take out yesterday's high, but really just kind of a weak day in terms of the market internals. And the same thing is occurring with the Russell. Rotation between 240 and about the 255 area. Volume down today and breadth in the Russell down. Net volume up but still lower. So really just doesn't give us any really indication of what to expect at the beginning of next week. The important aspect here is that the key reference areas I've pointed out of the support and resistance areas are really key, because once we test and or break out or rotate back down through those areas, those are going to be areas of good trade opportunity if you happen to be trading the indices. If you're not trading the indices themselves, it's pretty good indication to know that it's going to take the majority of stocks in an index to begin to make the index move either in a positive or a negative area. So it does have a reflection on the majority of stocks as well. Now, one of the other things I have been keeping an eye on, and I covered this in one of the daily briefings, is the percentage of stocks above the 20-day and percentage of stocks above the 50-day moving average. This is for the S&P 500. So you can see that when I talked about it, we were down in this area down here, and you can see that we've really improved substantially. This was giving me great concern that we had. I mean, down here we were at like 64 shares of the S&P 500 trading above its 20-day moving average, and about less than 100 trading above the 50-day moving average, which shows a real weakness within the index itself. But you can see the 20-day moving average has recovered very nicely, and the 50-day, which is a lagging indicator, is coming along very nicely as well. In the NASDAQ, you can see basically the same thing occurring. We have a really nice move up higher. About only a third of the NASDAQ shares were trading above their 20-day moving average when I talked about it in the daily briefing, and about a third of them were trading above their 50-day moving average. So a lot of weakness showing in this internal component, and the same thing with the Russell, improving nicely. So that gives me some hope that there's some strength coming into this market, and that the indices may have a chance at breaking out, but it all depends. And we're still in an environment that is driven by news. Price development is driven by news, and most of that news coming out of the oil complex and or the Middle East. So it's going to be an interesting week next week. I expect Monday, unless there's some news out over the long weekend, would be probably a fairly muted day, as a lot of companies, a lot of prop firms, a lot of hedge funds will take Monday off, as well as Friday. In the meantime, have a great long weekend, and I will pick this back up again on Monday for subscribers.